Hey guys, so we are live here on Newbie Real Estate Investors Podcast, and I got my boy Gherald Alaman here and Hector, who's back here again for the second week. We liked the info he was giving us last week, and we asked him to come back.
Thanks for having us.
Yeah,
thanks.
So guys, what do you guys think as far as what the general perception is as far as real estate market is right now? I'm gonna let you go first, Gherald.
Well, right now I think it's a great time to buy and a great time to sell. Right now everything seems like even keel. When I say even keel, the interest rate isn't that bad, but and at the same time houses are not way up there where people can't afford it. It's everything's still reasonable.
Yeah. What do you think, Hector?
So what am I thinking? Well, the interest rate paused. The Fed paused the hike on the interest rate, but it was announced that there was going to be a spike before the end of the year. So I think mortgages are going to be a little higher. There are still buyers, but I think we're transitioning into that period where people are realizing they can't afford a mortgage right now. The payments are extremely high and they're going to get more expensive. So to me, I personally think people will be on hold. I was talking to a couple of people that are in real estate, and something that they monitor is the Shiller Home Price Index.
Yeah.
Which is an index that tracks the price of the houses in the U.S. on average.
Okay.
It's in a decline right now. It's in a downtrend, but that has to pull back significantly for people to step in. You also have institutions now making it easy for people like us to buy real estate because they're buying a lot of real estate for their portfolio. So big competition there as you got companies transitioning into investment firms transitioning into buying more real estate than other assets. So I don't know, a lot going on.
There's a lot there to unpack. So we have also Joe Falla, and thank you very much, Joe, for helping us set up the equipment. So Joe, you're in mortgage, right? That's what you do. You're a loan officer. Give us your perspective of what's going on in the market.
It's
what do you think?
I'm not going to say it's crazy, but there are people still buying houses. The problem is that we're right back in the 20 and 2021 market where people are bidding, way overpriced on these houses, over the bid or over the ask price, 20, 50, 70 grand. And we're based out of Jersey, right? So that's what we can speak to. It can happen in mostly northern Jersey, Passaic County, Essex County. I'm seeing people, single family houses made, not completely, HD TV ready, and they're still losing bids $25,000 over ask.
Yeah, it was crazy because I had
the rates still being high.
Yes, definitely. I had a house that last about a month ago they put in a bid of $405,000 on the house, and we were really happy about that, right? And then all of a sudden the appraisal came in, and the appraisal was like $350,000. And the reason it was $350,000 was because it was an attached home. So it wasn't like, a standalone house, right? And then attached homes, there weren't that many comps because there wasn't that many in the city of East Orange. Okay. So that was the problem, for
and those
us.
are common types houses in East Orange.
What, the
attached? Yeah.
Really?
I find them to be.
Really? Okay. I mean, it's definitely
they're
more
not
common
everywhere, but they're
yeah.
You'll see them more there than anywhere else, I think.
Yeah, I mean, across the street from us, they're building brand new, like, attached homes. Brand
Okay.
new. So maybe we should have waited a few more months until they sold, but they were brand new construction. That was the problem.
They might have appraisal problems too.
Yeah. Yes, they're probably gonna have issues because there is no new homes sold. You know, like we're gonna be the newest at like 357. You know, so those brand new homes that are being sold now, they're not gonna be able to find comps.
Right.
Because, you know, there's hardly any new construction, first of all, for comps, right? So, you know,
that happened in Elizabeth when they started with the massive new construction that they're doing out there. They're knocking down these old houses and putting brand new 2 families. And I spoke to one of the owners, the investor, construction guy, and he said that he had missed his appraisal by about $80,000, which really cut into his profits because there weren't any other properties close enough to where he built 3 of them as well.
Right.
So he started with the first one, went and sold it, and he missed it by like 80 or 100 grand, the appraisal.
Oof, that's rough.
Yeah.
That's rough. I mean, even we got beat up about 50K or so.
How did you resolve that?
We took it off the market, first of all, because the buyer, the original buyer at 405, they wanted us to do about $15,000 more of renovation, and we were like, no, we're not.
Basement?
Well, there were like, basically they wanted everything that was on the inspection report.
Gotcha.
Everything, like every single item. We're like, no, that's not how it normally is. You know, it's kind of like you can pick a couple of things, and if we feel like it, we'll fix it.
Right.
So, I mean, we were a little bit cocky also,
Uh-huh.
you know, because we had multiple offers. And so we thought like, oh, okay, because we have multiple offers, we can kind of dictate the terms a little bit.
Also important, when did this happen?
This happened about a month ago.
Okay.
Well, yeah, a little over a month. So, you know, the market was still good, and it's, in my opinion, it's still good now, right? So because of that, we were like, no, we're not going to fix. Like, we'll fix little stuff here and there, but not everything on the list. Like, everything on the list,
Right.
we'd want 450 for the house,
right.
you know? But the problem is we're not, this is also FHA, right? So FHA, you're 6 months in, you're locked as far as the appraisal, right? So now we're kind of screwed because of that, right? So even the next buyer, whoever that's going to be,
Yeah, the bank's gonna, whatever bank you go to.
yeah, they're gonna know that it's 350,
Right.
regardless. Okay, so the only way out of that is if you can find a conventional buyer who doesn't care,
Or cash.
or cash. But who's buying East Orange in cash other than investors, right? So we kind of screwed, and we're like, okay, so now we went to a couple of the backup buyers, but because it took over a month already, a lot of them were already off the market because they already found something. So none of the backup buyers meant anything. So now we put it back on the market, and we had a couple of offers come in, but they were all around 350. They all came in at like 350, 345, 355. So we pushed the highest person, and we ended up getting 357.5.
Okay.
You know, and then so now we're under contract now, and hopefully we'll be able to close in the next 2 weeks.
Did you try to dispute? Did you try to get who was representing you guys on the real estate side? On the agent side? No,
it wasn't worth it.
Okay.
It wasn't worth it because that buyer, we basically told him to walk. You know, we told him to go kick rocks.
You could have still tried to boost the appraisal up with some comps if you could find some on your own.
Well, we did. So here's the thing: we did offer the appraiser comps. Like usually when the appraiser comes, we do have comps ready for them. The problem is most of those comps are not attached homes.
Gotcha.
So he's like, well, these are not attached homes, so I'm not going to take these comps that you guys supplied because they're not comps.
Right. You tried to be slick. Did you try to like put the papers together, make it look like an attached?
No, well, it was the realtor. It wasn't even me or any of us. So, So yeah, we had to take it.
Right.
So now we're down like 45K or whatever it is, which sucks.
Gotcha.
Yeah, which sucks.
So does that signal maybe the FOMO being fear of missing out, starting to get away?
My experience, man, it was just that one house. I'm telling you that the lines are out there.
And I wonder how much is just behavior in people from that FOMO of last year.
That's exactly it.
You know what I'm saying? Like,
Yeah.
I don't know if it's a behavior. The market makers are taking advantage of the behavior of the people, and they don't want that feeling to go away. So, and I guess, Joey, I want to ask a question. When you say the market is still good, is it still good for investors or for the newbies like us that want to get into real
Depends
estate?
on what side of the investor you
Yeah,
are.
so you have different sides, right? So you have, let's say, first-time home buyers, then you have newbie investors, then you have experienced investors,
Gotcha.
right? And then you got like institutional buyers. So there's all sorts of levels, whether you're an investor or a buyer,
Okay.
right? So if you're a buyer, let's start with that, right? If you're just a like lower income first time home buyer, right? You do have, well, I mean, Joe, you know better than anyone, right? You do have programs like, let's say you're able to get like a $10,000 grant, okay?
New Jersey offers up to 15 in Northern Jersey.
Oh, really?
Yeah,
15 now.
15
see?
grand.
So
You can go up to like 160,000 on the income.
Now, are these programs in Northern New Jersey? Is it by
No,
bank
it's the entire
specific?
state. So anything below, I don't know the exact county, but anything below Edison can qualify up to $10,000. Anything above it goes up to 15.
So I think this is great
Not
information.
all of Northern.
I don't think a lot of people know
Not
about
West.
these
I got to be very
grants.
clear because I'm a licensed loan officer.
Right.
The western part of New Jersey is probably also under the 10,000.
Okay.
So I'm talking about Essex, Passaic, Union.
Hudson.
Good question. Maybe
Morris.
certain parts of
Okay.
Hudson.
So
Bergen County for sure.
Okay.
They qualify for up to $15,000.
So the newbie, the buyer, all they have to do is walk into the bank or whoever they're working with and ask for this grant, or do they have to apply
No.
through the state?
Okay, so you should have told me I wrote my notes, bro.
I mean,
No, it's very tricky.
No, and I think this is great information for the viewers because if you're in the process of getting this loan, buying a house, you can get this grant, and hey, that's $10,000.
So the grant is offered through the New Jersey, what is it? The HMFA program, something like that. And they work directly with the lender. So the lender actually does the entire loan. And once it's completed, it then gets passed on to them. They kind of review all of the documents. And then they give the last clear to close. But the bank does the entire due diligence on the
And
the
most
loan.
banks, pretty much.
I
Or
know
it a
I do.
Community bank? I'm just trying to get differentiation between a community bank.
The
maybe
bank
DoorDash,
itself
or the
has
bigger
to be
bank.
qualified with the actual
Got it.
department.
Okay.
So once they figure that like my bank is covered, and again we run the majority of the play ourselves.
All right. So whoever's watching and wants to buy a house, where can they reach you?
You
to
can
learn
reach
more
me
about this program?
at 908-669-9091. I'm on all social media. Joe Does Mortgages.
There you go. Great info.
Yeah.
Very great.
Yeah. There are other banks that are offering more, but there are a lot of challenges sometimes.
Yeah.
I've seen that happen recently. But there are other banks that are offering, crazy amounts. I heard my bank actually on a conference call today talk about some additional grants that we're going to be offering.
Oh wow.
Yeah.
Nice. And grants.
The struggle is real.
Yeah, and grants, you don't have to pay it back.
Yeah.
So-
With the New Jersey one, it's only
Yeah.
after 5 years.
Okay.
It's free.
Yeah, it's yours.
It's non-recoupable.
Right. So what you just said right now, the struggle is real. Tell me a little bit more about how banks are considering risk when people are applying, given the circumstances, right? You get people being laid off. Do they care? Or do they
I think
not?
the brick and mortar banks are a little bit more. Their risk tolerance is a lot lower than broker banks and brokers and direct lenders like myself. as far as with my company, it's business as usual. Business as usual. There's no risk. We have certain DTIs that we have to stay under, and we'll go to the max if necessary, as long as the buyer can qualify for the loan. It's business as usual.
So now at a high level, so whoever's watching, right? Let's say they make $130,000 a year.
Mm-hmm.
Just, the average, or $100,000.
Okay.
How much will they qualify?
I like 130 better.
130. How much do they qualify?
Well,
what would be
that's
the
a tricky question.
Just one person, and if they bring a partner in,
Depends on the
whatever.
debts.
Depends on the debt. Okay.
You know what's the biggest killer right now of a mortgage, being able to qualify for a mortgage, is the car note. People think it's student loans. Oh, I got $150,000. We only use a certain fraction of that. Very, very small fraction of that when we're qualifying you. The car notes. What is the average car note right now? A little bit over
70,000 maybe.
No, I mean the monthly. It's
the
about
monthly.
like 600 and some change right now.
Okay, yeah.
You walking out of the door with a Honda Accord, with
expensive.
$3,500 down maybe. Maybe you know what? I've seen commercials, $5,000 down.
Yeah.
For a Honda Pilot, and you're actually I had a client recently. He had a Honda Odyssey, $750,000 a month. $750,000 a month.
You know what's crazy? I have a buddy of mine who owns a dealer, and he's going bankrupt because they're returning a lot of these cars. So there's a crisis going on right now.
That's a whole nother conversation.
Yeah, that's completely different.
Yeah.
But I think that's great information. So the car note on somebody looking to get into real estate, it's high risk. It's one of the high risk.
It's the one that lowers your purchase power the most.
Power. Okay. What would be
it's
another
not
thing?
student loans, everybody. It really isn't student loans.
What would be another thing?
It's really just that. Bankruptcies. People think they can't get houses because of bankruptcies. Depending on the type of loan, you can get a loan after 3 years on certain programs.
That's not bad.
But the car note is the biggest killer.
Wow.
Taxes as well in New Jersey, where you have comparable. I don't want to name the town, right? I don't want to get us shut down or complaints put on it. But there's a certain town in Jersey where you can find the identical house 3 blocks down the road, and the taxes are about $4,000 less than the same house in that other town.
Right.
Taxes are a big killer up here as well.
Wow.
You mean property tax?
Property
to be
taxes, right?
specific.
Thank you.
Yeah. Okay.
Yeah.
Yeah.
I'd say the number 1 and 2 is property taxes and the car notes right now.
That's great information. So, and people, if they recently had, well, not recently, but if they had a bankruptcy in the past 3 to 5 years, they have a chance to apply.
Absolutely.
I feel like there's a lot of people that
FHA is very forgiving.
That's good to know
Yeah,
too. I feel
absolutely.
like there's a lot of people out there that went bankrupt and they're like, no, I don't qualify. 3 years, that's not too much time, but that's good.
Yeah,
That's good
because
info.
they're thinking 7 years for
Right.
bankruptcy.
Right,
That's
yeah.
when it wipes out of the record, right?
You
7 years.
can get a car note after 2 years. Yeah, 7 years. Yeah, you can get a car loan after 2 years. After I think even sooner.
So if you
know
file
why? 'Cause,
bankruptcy,
yeah, they know you have no debts.
right? well, here's the thing. Let me give you guys a trick, right? If you file bankruptcy today, you better go get a car note today.
But that's the biggest disqualifier is the car note.
Is that like the same as when you get a mortgage, qualify today, get the same car the same day?
Yeah.
Does that apply too?
I saw on
Does that apply
YouTube.
too?
Yeah.
You seen that guy that bought like 50 Teslas that same
Yeah.
one day?
So I heard the way they do it is it doesn't report. The banks don't know. So it doesn't report for up to 30
Right,
days.
yeah.
So you have your down payment and all that stuff ready, and you just go. And here's $3,000. I'll be back in a few hours. Here's $3,000. I'll be back in a few hours.
I wouldn't recommend that.
I wouldn't
but
recommend this.
I'm just saying what people do out there.
Oh man.
Yeah, that's
cool.
funny.
That's cool. So, Joe, you were in Vegas, right?
Yeah.
Tell me a little bit more about the cabinet industry. What's happening? What's new out there? What's trending? What?
Yeah, so the newest thing with cabinet is this. There's a thing called 3-spline system. I wish I had a piece to display to show you guys, but basically a 3-spline system is this. You don't need screws, right? So you can put an entire cabinet together with no screws or glue or anything. So typically it takes you, let's say if you want to put a cabinet together and you're experienced, and this is similar to, let's say, like an IKEA cabinet, right? How long would it take you to put an IKEA cabinet together yourself? It takes you, I would say, like half hour to an hour, something like that.
So
One
full
cabinet.
kitchen? Like a full
No,
kitchen?
not a full kitchen, just one cabinet.
Oh, one cabinet. Okay,
One
gotcha.
cabinet, right? So it takes you that long just to do that. But the 3-spline system, it literally takes you like less than 5 minutes.
Like a jigsaw.
Yeah.
Like a jigsaw puzzle.
It's so simple. Because you don't need tools, you know? You literally don't need tools. I mean, it's good if you have like a rubber mallet to just, you know, like hit it together.
Right.
But other than that, you don't need like a drill.
What about like the hinges for the door and stuff like that? Separate?
Well, that's the only thing you would need. You do need like a little screwdriver or, you know, yeah.
Is this the newest trend? Like
This is the newest technology out there. So there's a lot of cabinets called RTA, means ready to assemble, which is what IKEA is, right? So
Okay.
you'll get a flat pack, and then you're gonna, you know, break open the box, and then you're gonna start assembling it. So the biggest advantage are for big builders, all right, and not for like the regular folks. The regular folks, we don't really care that much for this technology, but the big builders, they're gonna have a huge advantage because let's say, because I own apartment complexes, right? So I unfortunately I haven't had the chance to put in new cabinets for our apartment complexes, but when and if the time ever comes, when you order, let's say 100 kitchens, right? It takes a lot of space for 100 kitchens. But if you can get that 100 kitchens in flat pack, now that's like 10%, you know, well, not 10 times less space, right, that you're going to need, okay? So because of that, you need less space for like shipping containers and stuff like that. So that's where they're going to have a huge advantage, right? And then the next thing is that once they get to the site, it's so easy to put it together, you know? So you don't need like, the amount of time you save putting it together, assembling it, is so little, right? Compared to like an IKEA cabinet where like you're fumbling around for parts. Oh, the dolly is missing, and this screws are missing, all that stuff. So guess who we have here? We got John Boyle. Welcome to the show.
What's up?
Have a seat. What's up?
What's up, man?
What's going on? Yeah, my friend, she went to the bathroom right now.
what's up, brother?
Yeah. So yeah, grab a chair, and
Another one?
anywhere, whatever you want to do. Yeah. So that, you know, that alone saves so much time, right? And then from there, you're gonna basically, you know, install the cabinet just like you would normally. All right. So, you know, that's the cool thing about that.
How much cheaper is because that's what the bottom line is, right?
Right.
Everybody
Yeah.
cares
It
about.
is a little bit cheaper because you're getting quote unquote an RTA cabinet, right?
Okay.
Yeah.
Is the material just as good as like an?
Yeah,
know,
it's the
IKEA?
same. Yeah, it's the same, just like any other cabinet, you know. So that's kind of where you're. It's really the time of installation. That's where you're gonna have the savings, you know.
Wow.
Yeah. So
So it's more for the labor part of it that you're going to be saving some money.
yeah, a ton of time, you know.
Gotcha.
So, hello, welcome.
This is my friend Kat.
Hi, Kat. How we doing?
How are
Welcome
you?
to the Newbie podcast.
Yes.
So Joe, is that cabinet, is that something you're gonna be offering here?
Yes.
Okay.
That's definitely something we're gonna be offering here at
Nah.
Kitchen Design Lab.
Now tell us a little bit more about your place for the first viewers. Tell us a little bit more about your business in the cabinet.
So we have been here since 2020, but I
New York, New Jersey, Ohio, Pennsylvania. Where are you?
Garfield, New Jersey.
Oh, okay, cool.
Yeah, thank you for pointing that out.
And the name of your company is?
It's called Kitchen Design Lab.
Okay.
So yeah, we're running a commercial right
You
now.
tried the rest. You tried the rest. Come to the best.
No. That's corny, man. Come on. Come on.
There you go.
So we it's 3 partners. It's myself, Johnathan, and our other partner who
Okay.
would never show his face on
On
a
TV.
podcast or on TV or
On TV.
anywhere,
On social media.
or even on social media, right?
He's recluse.
Yeah. But his wife has like, I don't know, 100,000 followers on Instagram.
Okay.
Whatever. But so she will post pictures of him all day long. And he's like, no, don't put me in. Don't put me on. Don't tag me. Yeah. So yeah, I mean, we do basically stock cabinets, right? Which is kind of like off the shelf cabinets. Same thing like you'll find, let's say, Home Depot, Lowe's. We do semi-custom cabinets, which actually just offers you more sizes, if you will. And then we do custom cabinets. So if you're looking for like inset cabinets, right?
What does that mean?
So inset cabinet is where the face frame and the door is flush.
Okay.
You ever seen the really nice high-end cabinets?
I'm thinking like off top, like we see at a
You'll
hotel,
see
at a
it
nice
when
hotel.
you go around the other side in the showroom. You'll see it.
Gotcha.
Yeah. So those are called inset cabinet. I'll show you later what it is exactly. But so we basically go from high to low,
Gotcha.
or vice versa.
Now, what do you recommend? Investing more in the bathroom or the kitchen for somebody that's looking to have a better appraisal on their
You're on
house when they
fire
get
today
done?
with the questions, bro.
Yeah, I love it. Ask away, man.
He's like, I don't know what we're gonna talk
Hey,
about
man, you guys
today.
brought me here.
That's a really good question, man.
And we haven't even gotten to
Okay.
crypto
So
yet.
just I'll say this, like, and this may be the most machismo answer you could ever think about. But like, when a woman walks into a house and they're looking for a forever home, are they looking at the bathroom first, or are they looking at the kitchen?
I think the kitchen, because that's where they're going to spend the most time in, right? No?
These
Okay,
comments
you know
are not approved by
okay.
Joe Does Mortgages or any affiliation with Joe Does
Kat,
Mortgages.
mean it
okay.
like that.
You know what?
Come on.
Since we
I
actually have a
could.
woman's perspective here, are you more interested in if it was like someone buying a house for you and you guys are together, happy, blah de blah? Like, would you rather be more focused on the kitchen or the bathroom?
That's what people see more, no?
Yeah.
Yeah.
The kitchen, right? Yeah.
But then, like, are they like trying to say, oh, the men want you to cook more for him?
No, I don't mean it like that.
No,
Actually,
I didn't mean it like that. It's just more like logistically, women make the choice of what house they're gonna buy typically when it's a couple that are together.
Yeah.
The guy doesn't care as much, genuinely.
I don't care.
Well, I mean, because he's spending.
Living in it together, no?
Yeah, but the guy cares way less. He cares about making the woman happy.
A great example.
Yes.
I went to see a property over the weekend for a client with my realtor counterpart, and
Hi,
I
Jackie.
thought the house was not like completely refurnished, right? But it was really nice, really nice house. And I looked at the kitchen. I said, "This is actually pretty nice," and they turned it down because they said the kitchen was too small.
Oh, wow.
So in my eyes, I said, they're going to definitely make an offer on. They didn't even want to make an offer on the house.
Wow.
Yeah. In Woodbridge.
Yeah, I mean, we find that the biggest investment in a house is typically the kitchen.
Yes.
So kitchens, I'm talking about full-blown renovation, right? The cheapest I've seen is probably like, let's say, 20 grand. And then you can have up to, forget the up to like 250K for a kitchen. So kitchens can be up there, but also you can still, also for a bathroom, you can spend a good amount as well, and for bathrooms, you can spend, let's say for full gut, right? I'm talking about full gut renovations. Typically anywhere from about 10 grand if you have a really cheap contractor to about 75, 85K for a bathroom.
And how much of that is just the actual, pieces of the material, sorry.
It really depends. So if you're doing, let's say, like an $85,000 bathroom, right? And all the walls and everything, you're using full quartz slabs. That can add up.
So no low stuff, right?
No.
Okay. Just
No,
making
we're
sure.
not talking about that.
How much of a deal breaker is the color of the cabinets? And have you been in a situation where somebody doesn't want a property because of the color of the cabinets?
I don't typically find that as being an issue.
I think that's your higher end. That's your
yeah.
jumbo loans where people are gonna nitpick that stuff and try to get some money off the cost of the house because of the
Yeah.
color the kitchen cabinet colors.
Yeah. Like, hey, you got purple cabinets and nobody likes it.
That's your more nitpicky.
That's not like $1 million listing where like they, it's like a $10 million purchase, and just because the cabinet is like an off gray, but they wanted like a darker tone, like, yeah, they're not gonna, like, at least in the markets that we're in, they're not gonna nitpick that.
Gotcha.
Yeah. I mean, first time home buyers, you're not gonna make a big issue of color cabinets. Not typically, But if you do, you can paint the kitchen. I mean, probably run you like, say, $3,000 to $5,000, repaint the cabinets.
After the closing, go paint
Yeah,
your heart's
after
desire.
the closing. Yeah. Exactly. Paint it whatever color you want. I mean, yeah. I've had clients paint their. So she did her backsplash like 4 different colors. Like, just I just gotta show you.
Like
It's
the
hard to
rainbow?
really describe. It's not
Like
really a rainbow.
Skittles, like a Skittles bag?
Almost. Yeah. Almost. But she's an art teacher. So I forgive her because of that.
Gotcha.
But if you were just like a regular normal person, then yeah, no.
Nobody's gonna care.
Yeah. So let's jump into some crypto. What's going on? What's the latest news on crypto investing? You sent me some articles last week. I bought some stuff.
Oh, wow.
Congratulations.
Yeah. So
I just see
what's the latest
regulation.
news?
Every headline I see regulation this, the SEC this.
Yeah. Well, I think regulation will be good for the market because it's going to bring in institutional buyers.
yeah.
Right now, we had last week, I think it was on Thursday, BlackRock apply for an ETF. BlackRock, for the most part, I think the ETF will get approved because they have, I think they only had one ETF denied, and they've had over like 400 ETFs that they have approved already. So they have like a 99% chance of getting approved. And that would just bring a bunch of institutional buyers into the crypto space, which is big money.
Yeah.
I think for people like us, we're in a stage where the bear market is over. And I'm not saying it out of news that I see on TV or anything, but out of technical analysis, the charts. That's what the data is saying. We're way past the year bear market time frame, and we're in an accumulation zone. So I think, well, not financial advice, but if you can get your hands into crypto or Bitcoin under 30,000, I think you're set for the incoming explosive move that's about to happen in the market. I also think that there's a lot of projects, altcoins, that are gonna die. And
What are altcoins?
altcoins are projects that
Alternative coins.
right? So it's other projects that I don't want to say. Well, they try to compete with Bitcoin and the blockchain technology, and they offer different type of solutions.
Mm-hmm.
So the biggest competitor of Bitcoin is Ethereum, for example. But Ethereum is huge. That's the
Would
second
those
largest
all
cap.
go in? You think those will all go into BlackRock's ETF?
No. So I actually think why the SEC started pointing fingers at some altcoins is because they want to shut down those projects. So Bitcoin takes the spotlight.
Okay.
Because you'll be
They
surprised.
prefer Bitcoin.
They prefer Bitcoin. And you'll be surprised how many people don't want to invest into Bitcoin because they think they missed the trend or they missed their opportunity. But this is really the time to be accumulating Bitcoin because Bitcoin is king. That's what institutions, countries, that's the founder. That's what's gonna rule in the future. But I think the future is now.
There are a lot of I saw an article where there's a lot of stores or like concerts where they're like refusing cash now, and they're putting like ATM machines so you can convert your cash into a card, so you can go out, at the carnival, whatever the case may be, the concert where you're buying merchandise and stuff, because they're trying to deviate people away from using cash, right?
Cash, yeah. I mean,
They got Bitcoin machines too.
Yeah, no,
Yeah. Yeah.
Yeah.
absolutely.
so now let me ask you this, right? What made you buy some crypto or Bitcoin or whatever you bought?
So I bought crypto, I want to say maybe a year and a half ago, when it was close to like the $50,000 range,
Oh,
right?
Ouch.
And then I
But that
watched
depends on when
it.
you bought it.
Huh?
That depends on when you bought it. Early 20s or
No.
2020 or
Yeah, around 2020, something like
Okay.
that. It was in $50,000 range, right? This is when everybody's talking about, that Dogecoin, all that, right? As it's going up. So I'm dollar cost averaging up,
okay.
right?
that's rule number one. You can't buy as it's going
Yeah,
down.
exactly. So I'm doing
That's
that.
right out of Vistapedia.
Yeah. So I'm doing that, and then towards the end of last year, it starts going the other way, right? But I didn't dollar cost average. And I'm like, oh crap, all crypto is fucked. Okay? So what do? I said, you know what? I don't know where it's gonna go to. So I said, let me jump off the ship. So I jump off the ship around like 17.5 or something like that, like at the bottom, right? So now I got a few $1,000s left, and it's just sitting there in cash. Okay, so I'm like, horrible. This is like that. It's kind of like the classic. Don't do this,
Right.
right? And I did it.
I think there's a lot of synergies in the mindset of real estate investors and stock or crypto investors, to be honest. And if you think about the people that are going to flip a house, right? They want to buy low, sell high.
Right.
And they do their digging, they look for comps, they look for nice areas. They look at the way the economy is doing, right? So as somebody buying crypto or stocks, we do the same.
Yeah.
We look for stocks or cryptos that are pretty much at the bottom or near moving averages that make sense to buy. So for example, something that I use a lot for Bitcoin is the 200-day moving average. And this is something institutions use a lot,
Okay.
which is what is the price of Bitcoin and on different time frames, by the way. When you're looking at these charts, and I wish maybe one day we could do this, set me up with the computer that I can screen share and I
Yeah.
can show some things live. So just so people could understand. So I don't, because that's why I started this whole thing that I'm doing, which is Gherald Industries. It's to share information so people don't get wrecked. Now you got to understand, right? There needs to be liquidity in the market, and that's something that we provide for the institutions or for the smart money. They sell to us. We hold the bag, and that's what we're not supposed to do. So they want people to buy
Like me,
high.
yeah. They want people like me.
But that's not gonna be you anymore because you have me. I wanna
That's
make
right.
Sure,
That's right.
I'm gonna make sure you do good in this market. And if you look at what I've been posting, I mean everything is data driven. But what I try to share is that I don't know what I'm doing. Oh, is it really the bottom? Oh, where's the top? You know?
Yeah.
Because there's data points. The data's there. So I guess trying to bring it back to real estate is you won't buy a house or a property if you don't know what's gonna sell for, or get an estimate of your, what is it, ARV, after repair value,
Right. Yeah.
of your ARV. You know, things like that, and that's something to keep in mind. Is that I think you guys have the mindset. It's just that you need those pieces to put together and get really good into.
I just think it has a different set of data points that you have to take a look
Right.
at, rather than, like for real estate, you're looking at like comparable sales. Like if it's like smaller residential, you're
Right.
looking at like the rents and like the cap rate if it's bigger multi. Right. But for like, you know, Dogecoin or for like Bitcoin or anything like that, you're looking at like you're looking at what's trending because, you know, again, that although I hate to say this, but like, for example, Elon says a tweet and it just has a picture of a fucking Shiba Inu and all of a sudden, you know, Dogecoin goes up like 10 cents.
Right.
You know, so.
But that goes to like when you're buying this property, right? The location matters.
Yeah, exactly.
Right. So for crypto and stocks, what stock you buy is what matters. You see what I'm saying? So
exactly. It's kind of like getting good news, like, oh, this new mall is going to be built right here.
There's new developers being built here. Boom, they come.
So then all of a sudden, like, okay, now the property value of everything up right there just is skyrocketing.
Yeah. So there's a lot of synergies if you think about it.
A good example of that is a friend of mine recently, you know, this whole Budweiser controversy, right? And I'm usually up on the news all day, right? And my friend calls me because he knows I'm in the market. And he goes, how do we short Budweiser? I'm like, before I heard anything, right? I'm like, I don't know, let me look at the chart for you. I pulled it up. I'm like, there's no liquidity in this thing, right? The chart was just horrible as far as, you know, for options trading. I'm like, it looks horrible. And then a few hours later, I'm on like CNN or something like that. I'm like, oh, that's why he wanted to know how you could short Budweiser. But it wasn't a good stock even before the controversy because there's no liquidity. And you can, you know, once you know once you can look at the charts, you know, it's like the Matrix and you just see it. I'm like, there's nothing going on here. This stock sucks.
So let me tell you guys something. Bitcoin just broke right now $28,000.
Wow.
Was it 25 last week?
When we talked about it,
25, right?
24, actually. So
Wow.
it's up almost since we talked about it last week. Almost what, 7 or 10%?
Yeah, I was about to say it's between 7 and 10.
Not
Did it break? Is it below or under the 200-day moving
Now
average?
it's over.
It's over?
So now when the price is over, you don't want to be buying when it's too extended from the 200-day moving average. 'Cause
Right.
The 200-day moving
Above
average.
it.
Yeah, above it. To the extreme. So if you're buying near the 200-day moving average, that's like one of your best comparisons. Like when you're doing a house comp, you know, you get a bunch of houses, then you get this number that you don't want to be too over or too under.
Right.
So the 200-day moving average is just, you know, a simple indicator, but it gives you that
What
data
is
point.
so as of today, as of right now, what is the 200-day moving average?
Let me check for you real quick.
All right.
Yeah, no, it just kind of reminds me then of, you know, like when you're buying a house and you're renovating it, it's 70% of ARV minus repairs, and that's like the
basic formula.
The basic formula.
That used to be the formula,
So-
right?
Yeah. No, you know what?
A lot of people are like straying away from it right now.
They're going to 60, 65 now.
No. Well,
no, they're even worse.
the-
right now,
Really?
honestly.
So the formula really should be 65, right? Our
Okay.
formula was always like 50, 60.
Okay.
Yeah.
You know, that's how we always bought like houses where we did well,
Okay.
right? And then
So the formula tells you what? What this
well,
formula
it tells
talking
you
about?
how much is your offer
Okay.
to purchase the property.
So
Okay.
let's say the home is going to be worth $400,000 when it's fully renovated, right? So 70% is like the maximum that you would ever offer, like, and that's like if you know it was like this extremely competitive market, extremely competitive pricing, whatever.
Just some makeup done on the house, right?
Well, it doesn't matter
doesn't
what
really-
the actual
yeah.
renovation. So
So
let's take that 400K number, right? So we multiply it by, 70%, which is $280,000, right? And so where you get that deviation with that number is the renovation. So let's say you do a lipstick on a pig and you're putting 20K. So then you're gonna subtract 20K from that number. So now your offer is 260.
That's the highest you could offer.
That's
so
the-
meaning
yeah.
that typically you'll start, let's say 230 or something like that. to
And then
see
you
what
move
happens.
up. Yeah. But if you're doing, let's say, a full-blown, $100,000 renovation, then your max offer is $180,000. Minus.
But that
what-
denominator's changed, right? That
It honestly hasn't. The formula's exactly
because you guys
the
were
same.
less
But-
aggressive even going into this crazy market.
Right. Yeah. So that's why we haven't really bought anything, because like 99% don't meet that
Yeah, 'cause
criteria.
most of the people now, I don't know what they're doing. That like either they're just like they're doing their own marketing heavy and they're finding their own deals and they're not, like they're not wholesaling it at all. But the wholesale deals that I've seen, they're at like 80-85% of what the home is worth minus repairs, which then that's where
With the wholesaler's fee in there.
yeah, which then at that point, the only person who wins is probably the wholesaler.
Right.
Yeah, unfortunately. So the wholesaler understands their number better than the investor, unfortunately, right? Because they're kind of putting the investor at a point where it's kind of like almost retail, but it's not, because there should be a 30% discount, right? Let's say. But now the wholesaler is like, okay, I'm going to give you a 15% discount. But you're a brand new investor. You had no idea the formula. And then you're like, oh, I'm going to get a 15% discount. Sounds great, right? But you don't realize like all the fees and expenses you're going to have to spend. And then at the end of the day, you should have just bought a retail house.
Where can they get this kind of information from, Joey?
Well, from this show, right?
Oh, okay.
Yeah.
I just wanted to make sure.
But listen, I think that's the secret sauce, man. To be honest.
Like people don't take into account like 5% realtor fee. They say that there's no standard. Yeah, it's fucking like 5% pretty much.
Oh, and it goes back to what we talked last week, overhead costs. I'm sure that these matter.
That's what I'm saying.
Like,
5% realtor fee plus like the cost of money. So like if you're borrowing money at let's say 10% for the year, if it takes like a year to do it, well then that's 10% right there.
Right.
And let's say the attorney fees, like both for the purchase and for the resale. Then what other thing? Let's say you have to evict someone, eviction fees. Let's say you have to. There's so many other things you got to associate with the property.
I mean, you got utilities, title, like you said.
Thank you.
When you sell, you got the realty transfer tax. Okay, you don't have it when you buy, but when you sell, you got that.
New York City, just because we can tax.
Yeah, and then tax, and then whatever we want tax, all kinds of tax.
And you compare it to the market, it's kind of like similar to what they were saying. One of the first rules that I learned in trading was once you hear it on the news, it's too late.
Yeah,
it's too late. You've missed the boat.
Yeah, you can't. Yeah, even I was thinking about when you showed me that article about the BlackRock. I was like, is it too late already? Because by the time everybody sees it and it circulates days later,
right,
they've already taken that profit.
But the ETF is still being created, though, right? It hasn't been created yet.
Yeah, it hasn't been approved yet.
Right.
But I think they have been accumulating though.
Yeah.
Because they knew they were gonna do this.
Oh yeah.
So,
They've been buying.
So there's two things that I recommend.
Especially
people,
at this price.
Like if you're not a technical analyst at all, if you're not looking at charts, two things that help you get a comparison of how far out. If you're making your risk reward, right? The realized price of Bitcoin and the 200-week moving average price. So the 200-week moving average price is 26,300.
Okay.
That's the wait. Let me just double check because I just saw it right now. Yes. So it's this red line over here.
Okay.
I wish I could show the camera. 26,300. And the realized price last time I checked, it was about almost 22,000.
Oh wow.
So if you're buying within that range, if your average cost is within that range between 22 and anything less than 26,
it's a buy.
Yeah. You're well positioned to where Bitcoin is heading.
Right.
Now, the further out you start gaining from that, your risk reward starts changing. So when things pull back, they tend to pull back to these numbers. The biggest correction that Bitcoin just had took us to 15,500. If you look at it, it wasn't too far from the 200-week or the realized price. And it went further than that because you had a bunch of companies going bankrupt. You had FTX, all these scandals, et cetera, et cetera.
Yeah.
And you had that big panic moment. That's where you actually start buying. Yeah.
Yeah, it should have been the opposite.
It should have been the opposite.
You think
not
next
buy high, sell low, right?
Buy the rumor. You think the next buy the rumor for Bitcoin is when they finally figure out the regulation and all that stuff?
No, I think
the government.
I think we're going through it right now. The BlackRock ETF. Now, the way these institutions work, if BlackRock is making a move, the competitor wants to make a move with them. So who do you think is actually? It's already on the news. It's Fidelity. They manage trillions just like BlackRock, so they want to be in the game too. So you have Fidelity, BlackRock talking ETFs. This is huge.
That was a couple months back. I didn't hear so much good things about that though. I forgot exactly what I heard with Fidelity, with the Bitcoin.
Well, Fidelity actually started getting into this space before BlackRock.
It was a few months, like late
No,
last year, right? Last year, right?
Yeah, they actually, if you have a Fidelity account, you can trade Bitcoin.
I closed it. Yeah,
You
that's what it was. That's what I was.
You
hearing.
can actually trade Bitcoin.
Yeah.
In my in my IRA, I bought MicroStrategies, which you had mentioned, but again, I bought it high, but I did dollar cost average it. I haven't bought any lately because of the price and then it coming down. So,
but things are changing now. You got everyone here. We're talking, so we're gonna make good decisions. I just recorded something for my Instagram.
That's all
I
good.
realized I didn't post anything. But yeah. What else did I want to talk about? I was gonna say something. Did you?
I had a question for you two guys, right? So I've seen some guys, especially like on YouTube, right? Some professional, investors, and a lot of them missed the boat on refinancing their properties out. Like the writing's on the wall, right?
Mm-hmm.
You know what the interest rate is, right?
Yeah.
These guys aren't dummies, right? What is going on within their lives or the way they manage their business that they're just not refinancing all this stuff when the rates were down at 2-3%? What happens there? Like who missed the boat?
Well,
I've seen it quite a few times. See, I brought a laughter to him.
Let me answer some of that because it's funny you say that.
It's all about the dollar cost averaging, right? That's how I'm relating this all.
Something.
You see how everything just relates? If you
We're
think about
here,
it.
brother.
So the crazy thing is that it happened to us, right?
Okay.
We bought so many properties back in 2021, and then in 2022 we kept buying, knowing that the market was gonna slow down a little bit, but at the same time we didn't think the interest rate was gonna rise so quickly. We knew it was gonna be like a bump, but not like the way it happened. So that kind of slowed us down a lot. Like that basically halted our business. Forget about slowing down.
Gotcha.
Right?
That also like cut some of the properties that we were gonna keep as rentals to now. Okay, we gotta sell it because it doesn't make sense to keep it as a rental anymore, just based on the interest rates.
Sometimes it's good to maybe have a loan officer or a mortgage guy in your
corner.
on the phone.
Absolutely.
Because I've seen actually, you know what's been quite popular last couple of months, the last couple of weeks actually, people buying second houses, and I see it there as well, like 4.5% mortgages. I'm like, no one reached out to you with all this technology. My bank does it. As soon as someone, these are 2-3%.
Yeah.
They've gained some appreciation in the house. I'm getting alerts. My company sends alerts directly, man, and then we follow up with our clients. Like no one reached out to you.
I'll give you an
You know
example.
what I mean?
Yeah. No, absolutely. No, we had a Airbnb. It was a lake house, right? And our hard money loan was kind of coming due, so we had to make a decision, and we shopped around for rates. And because the rates were starting to go up, we decided after all the costs that it was better for us to get out now. So we ended up selling
The cost of refinancing?
Yeah, well, cost of refinancing. There was a lot of repairs that had to be done, like big money repairs, because it was on a lake, right? The seawall had to be redone, for example. Mm-hmm. The dock was a little like, yeah, it was like skewed. So that had to be repaired. And then we needed probably like a new roof, new siding. The retaining wall was going. So it was a lot. We had to get a new boiler in there. So it was a lot of work that still needed to be done.
So you didn't think you were going to get the LTV that you thought you'd
No, it wasn't that.
After the repairs, or?
It was that we were gonna have to put in, let's say, another $150K or more into that property over time, right? Not like all that stuff didn't have to be done like the next day, but over time it would have to be done eventually, right? Because slowly it's starting to fall apart. But for the purpose of the property functioning as an Airbnb, it was fine. Like nobody's gonna go on the sea, look back at the house and go, oh, the seawall's falling apart. Or it's rotting out. It's been rotting out for like the last 10 years. Who knows how long, right? So with all that, we were like, okay, there's just way too much deferred maintenance on this house. So it was just cheaper to just take the money. We had a lot of equity built in. So we're like, let's take it, right? Let's take the equity, and then hopefully we can find something else to move that money to.
Another thing I like to mention that we didn't realize until after we started doing our accounting for the property is because of a lot of that deferred maintenance that we just had to do throughout the roughly 6 months, 8 months that we had it as an Airbnb, that pretty much all our profit went to that deferred maintenance. So we actually made the decision. That was one of the main reasons down the line that we were like, okay, we need to sell this property because, well, one, for that, and then two, regulation was going down really heavy in that area for
Airbnbs or.
So we're like, okay, yeah, we don't want to be involved with that anymore. And then finally, we actually, we had a shit ton of equity. We bought it for $275. We renovated roughly 30 plus, let's say, 30K-ish, a little more than that. And, we sold it for, what was it?
Like $575, something like that?
Probably even higher than that, I think, I swear.
$585? I don't know.
This is on a lake?
Yeah.
Lakefront.
Yeah. So, we made a killing from that.
Lakefront, yeah, not on the lake.
Yeah. Yeah, it was in an island.
Yeah. No, but we made a killing from that. And it's funny. We got really, really lucky there, too, because, the neighbor, she was our cleaning lady, too.
Okay.
It's
So you had eyes and ears on the property.
Yeah. So during the whole time we had it as an Airbnb, we were good, too, then. But wintertime really sucked for us because we had a super old oil boiler, and it kept breaking. It kept stopping.
Yeah, it kept getting too cold. And then, have people complain. And then, obviously, as an Airbnb, you have to, make it right.
Right.
Yeah. So we kept, and then it didn't pay if you, let's say, you try to winterize it for the winter because you still got your payments you still got to make. And in the summer, you didn't make enough to cover the winter,
Gotcha.
So it didn't make sense for us to keep it in the end. So we're like, you know what, let's just sell it and take the profit and move to, another property, basically.
Gotcha.
Yeah. So, a part of it, going back to the mortgage, right? A part of it was not being able to refinance at the rate we wanted. When we first underwrote it, when we first bought the property, the rates were at a certain point, right? I don't know, you can 3.5%, 4%. And we were thinking, okay, because we're probably not gonna get a conventional mortgage on the property. We were thinking, I think at that time we were thinking maybe 5% or 6%, something like that. And then rates just came out 7.5 or 8, and we're like, what the?
Especially for an investment loan, you're probably tapping into 8s as well.
Yeah. So that's kind of what happened to us. And then, so you were talking about how come we didn't refinance? So a lot of the other properties, we weren't done with the renovation, so we couldn't refinance.
Gotcha. Okay.
So that also hindered us too.
Yeah.
So it wasn't we didn't want to refinance because we were just, lollygagging.
It's a good question because I've spoken to people. I remember early last year when the rates were high 4s or 5s. this woman, she was at a 6%. I'm like, why did you refinance? She goes, don't even bring it up. And we left it at that. She was just content with paying him, not saving $300 to $400 a month.
Right. Well, it happened to me at my own house, but that was because there was so much paperwork. I think I told that story the week before, but because I have like 15, 20 different freaking LLCs, and you gotta finish all your taxes on that, right? Mm-hmm. And I did an application to Navy Federal, and they approved me, but I wanted a lower rate and more LTV. So I can get, pull out more money.
No bashing the competition. How long did that process take with Navy Federal?
It took about a month or so, but it was mostly me getting all the paperwork together.
Gotcha.
And then I went to
so not much at the bank.
Yeah, and then I went to another bank, and they wanted like another years of tax return because the time period passed. I should have just took the Navy Federal, took the money, built my addition. So I wanted to put an addition on my house.
Right. Okay.
But because it wasn't enough money, in my opinion, so I was like, I don't want to fall short because I got three things going on, right? So first of all, I got to move my entire family out of the house. So I got to find a place to live while I do the addition. Number two, I'm going to use my own company to do it. So now I lose opportunity costs because I'm not doing the work at somebody else's house making money, right? Mm-hmm. I'm using my own guys to save some money to do the work at my own house. So I kind of like have a lot of negatives doing it. And I explained that to my wife, and she's like, I don't care. I still want the addition.
When are we getting those kitchen cabinets redone?
Yeah, exactly. Well, I explained that to her also. Right?
She's like, so?
She's like, yeah, so just get rid of the stairs. No, because, he's been to my house, and I think Gherald's been to my house.
I've seen it from the outside.
Yeah. So my kitchen is small, right? I got a small kitchen, and then I got the stairs going down to the basement, and then the dining room. So the stairs going down to the basement is blocking me from expanding the kitchen any bigger.
Oh, gotcha.
So I would have to kind of get rid of the stairs there.
You have to put another easement or whatever.
No, not even easement or anything. Like I just got to put the stairs somewhere else.
Gotcha.
Not between the kitchen and dining room.
Gotcha.
But if I was to build an addition on top where I can move the bathrooms and because my house is a ranch, so everything's on kind of like on one level. But if I can move all the bedrooms upstairs, add some bathrooms up there, that would be much better, right? So I can move the stairs elsewhere, and then I can expand the kitchen actually towards the bedroom and the bathroom side,
Gotcha.
Yeah. So that's kind of where like I have to spend a lot of money to improve the house, and at that time I was even thinking about, maybe moving out of state because, you hear everybody's like moving to Texas, moving to Florida. So I was like, I don't know. I'm thinking about that possibly.
North Carolina, South Carolina is very popular.
Yeah.
Right now as well.
I mean, my brother-in-law, he's down in Tennessee. My wife's cousin, she's also down in Tennessee. So that's another possibility, right? Because she doesn't like Florida. My wife doesn't like Florida because she's like, oh, it's too hot.
It's very expensive right now, too.
Well, now, yes, talk about that. Miami is now the most unaffordable place.
Yeah, I saw something on that this morning.
Yeah. Just saw that in the news.
Yeah.
So,
that just makes me regret not buying a 3-bed, 2-bath condo in Brickell for it was like $350,000 at the time.
I saw.
Now I'm sure it's like $600 or something within like a 2-year time span.
Oh yeah.
I mentioned it last week. I was down in Miami.
Friend, because my friend was gonna put the money down, and then he just backed out last minute, like, oh, I'm not gonna do it. And then
what an idiot.
Then I send him links, and he's like, oh yeah, oh well.
I saw a property. I think I mentioned it last week, up right in the heart of downtown Miami, like 3 blocks off of Washington, for $425. This is like 2016, something like that, 2017. I was like, whoa, this is expensive. That thing's probably worth over $850,000 right now. For
Probably.
the same apartment.
Damn. Well,
It's a lot of overseas money. That's just like with the stock market. A lot of overseas money. That
well,
that's
a lot
driving up the
of
prices.
a lot of the people up from New York City, the Wall Street, all the Wall Street companies have moved down to Miami.
Yeah.
They've relocated down there.
San Francisco is going to look like Mad Max for those of you that remember that movie in the next couple of years.
Yeah, I haven't been to San Francisco.
I don't think you want to go to San Francisco.
Not anymore. I used to want to. Because so my favorite teams, like the 49ers, San Francisco 49ers, so I always wanted to go out there, but never actually had the chance
Gotcha.
to go out there.
You're better off watching it from TV.
Yeah, I feel the same way. I mean,
No
they had
bash in San Francisco,
they had a hotel that just closed down there. I forgot the name of the hotel, but yeah.
I actually saw a video recently. Sorry. And where they're incentivized, it's true. A lot of, not to get political, but it is what it is. They're giving these homeless people like almost $1,000 a month to live on the street.
To live on the street.
Yeah, they're very content with it. They get a free cell phone. They got money for food and stuff. That's essentially what's happening over there.
Well, why live in a place?
Why pay for an apartment if I can live on the street with a tent?
Not funny enough, but crazy enough, like in New York City, anytime I'm walking around, I've seen plenty of homeless people with their like iPhones charging
at the charging
at
stations.
one of those charging stations, just sitting there. Like I'm just like, wow, this is just interesting to me, just watching that.
Well, they have a lot of new commercial buildings going to be coming up for sale real soon. A lot of vacant commercial buildings.
Yeah.
Maybe we can figure that piece out at the same time.
Yeah. I mean, commercials getting killed everywhere.
Yeah.
Right now. Everywhere.
It's all technology. Just, simple free platform like Zoom just shut down an entire industry.
Yeah.
It's a lot more than that, but it's amazing. Yeah, like we have to take these meetings here and there. You can just do it right on your phone now.
I wonder if that it's going to cause such a chaos where it's going to hurt the banks even more. The collapse of defaults in commercial loans. What do you guys think? Is that possible? It's like an extra hit to the banks.
I'm not an expert in that, but it's going to happen. Yeah. I think that's one of the pieces that'll drive the market down a bit, when, an entire building just defaults on a loan and starts happening one block after another.
What will be the impact on regular houses? Will there be any?
I don't think so. Just for residential, there won't be any fallback. As long as those buildings that are shutting down, unfortunately, there's going to be maintenance people losing their jobs, parking attendants, cleaning crews. Yeah, that stuff, it's unfortunate. But, if those people own houses, then it will affect the residential market. But I don't really see it. Manhattan's a beast. Like, it's going to take a lot more than a few buildings shutting down. I'm here on 125th Street, Harlem. It's completely for sale.
I know people who own in New York City typically tend to have enough financial backing that they can hold it for a significant amount of time. Like, I have a friend of mine, he mentioned how his business partner was like the son of a billionaire who owns this one building, and like he wanted to bring me into it to raise money for this project. It was like on East 43rd or something, but it was like right by Central, or like by Park Ave and everything. And it's like an 11-unit building, and like they own it free and clear. And basically they were gonna give it to the son as like their first project to see if they could make money and raise money and do all this.
Was his initials DT? Junior?
No, but funny enough, like that's actually another reason I was like really tempted to go back to school for like my master's at like NYU or something, master's in real estate, just because it's for the connections rather than anything. But like he was like, yeah. So my friend, he just graduated from getting his master's at NYU, and he built that relationship solely from going to class with this kid.
Did they end up building? Did they end up buying it? Or
They haven't bought it yet. I guess there's like
might
some
get
other
pennies on the dollar right now.
Like I think there's just some like so okay, so the father owns the building already still.
Okay.
It's just I think there's like some issues going on. You know, they don't want to tell me too much detail, but when they're ready to raise money, they're gonna bring it back and talk to me about it. You know? So I was like, okay, well just let me know. I know New York City isn't like the most
Attractive.
but I know some people who would be interested in New York just because they live there.
Right.
Yeah.
What I heard, I used to work in the 50th floor Rockefeller in New York when I was a consultant for a consulting firm. And I'm hearing companies are actually bringing back their employees.
They're trying.
Yeah.
And because there is a benefit of having people remote, but they actually are being pushed by the government to bring back their employees to hold all the commercial real estate. I don't know how true that is, but it makes sense.
It makes a lot of sense.
It does.
to
I think
do
we've
that.
missed the boat on that. Like everyone's just getting comfortable. You know, even city employees, whether it's like 3 or 2, something like that. They work 3 days on site, 2 from home.
Yeah, but the way the labor market is right now, I think people right now can't choose if they actually want to stay remote because there's not a lot of opportunities out there for white collar jobs, to be honest.
Yeah.
You know, you got companies like Google, LinkedIn, you name it, Meta, even Tesla laying off a bunch of people, and even letting them go because they don't want to come back from being remote. They couldn't find talent. Talent is out there right now.
Yeah, there's a lot of talent out there. I think it's almost like a connected effort. Like all these big companies, they're all following each other.
Yeah.
Right? Doing it so that they're all in unison. So
That's what it's going to take.
yeah. So that, like the employer has the power, not the other way around during the pandemic, So that's, yeah, guys, with that said, it's the end of the show. I think our time is up. So thanks for watching us. I'm Joey Chan, and this is my partner, Johnathan Boyle. We got Gherald, Hector, and Joe. So thank you for watching. You catch our info at the show notes. All right. Thanks a lot, guys.
All right. Peace. Don't say anything stupid yet.
Yeah, John.
We're good.